Hello everyone, this is Annie from Recommend Capital and I'll be showing you through that click on NZDJPY which yielded, let me check how many pips, which yielded 198.3 pips. So let's get straight to it, and I'll be showing you a trade screenshot so that I actually did take this trade. And of course you see on the screenshot I entered somewhere about here. That was because I didn't want to miss this trade entry. I have a lot of trade entries I have missed. Some didn't activate due to spreads, and some due to the fact that it was the Asian session, or some before due to the fact that the market moved quickly away from that level. There were like a lot of orders, buy orders, sell orders at that level that basically didn't allow it to get activated. So as you can see here, I missed this trade. I didn't take a particular trading on. It gave us a risk to reward of 1 ratio 12.42, and of course having a 1 ratio 12.42 is nice. I don't go looking for 1 ratio 35.1, 1 ratio 60 and some other trade ideas like that. So let's get straight into it. Just like I trade I in my last video I spelled it out. I basically use supply and demand level. I did not use Wyckoff. Wyckoff, I tried using it at one point in time, but it was really cumbersome because you have to start looking for Wyckoff accumulations on the 5 minute time frame, the 1 minute time frame, the 4 hour time frame. Of course, it's easy to see, and most of these structures you can't actually see them before once they actually happen. Of course, you can see this one and you can say, "Oh, it is a Wyckoff," but you won't know until it made this higher high and broke this previous high. So let's get straight into it. So looking at the 1 hour time frame, like I said before, there are reasons why you mark out a level, demand level, or reasons why a demand level will probably hold. Looking at this, you see, oh, why did I pick out this level? Of course, it's the same thing. Price made a low, breaking this previous structural low, like I said before, like I always say, equal lows are levels in which there's liquidity below them. So market is always looking to take out equal lows. Anywhere you see equal lows, just know that support and resistance traders are there. And it for it being on the 1 hour time frame even makes it all the more easier. Equal lows, support and resistance. Oh, let's buy on the third touch. Of course, you can see that there was a move to the push to the upside before price later broke it to the lower side. Now, why do we take this level? We can see price. This level is important so that they didn't mitigate this level. It was just a straight drop and a rally, a drop, a base, and a rally consolidation, and of course was an upward consolidation. You can see that price was basically moving in a range, this range, basically moving in this range before it broke this structural high at this level. Before it broke that level and broke to the upside. Like I said, like I always say, pardon me, they have to mitigate their orders. Of course, you have to mark out levels and really understand how they mitigate their orders. That's one thing I have perfected over years of trading now. I basically see my cue to take this trade. You can see this is sold all the way from here. Of course, they couldn't mitigate. They mitigated this candle, this bearish candle here. As you can see, that's where it opens and they put price back there. But then they didn't mitigate this. They didn't mitigate this candle. So let's take out our line two. Let's highlight it. Horizontal line. Let's highlight it. And then you can see that price basically tapped into it. Now our stop loss level will be the low of the candle. You can see price made a high of 76.088 and a low of 76.099. Of course, this is a very good risk to reward ratio. And like any of my trades that I take, I basically set my take profit level at the previous high where price got for making it back to our POI. So I think the network is lagging. Okay, so here we have it. So here it is. So basically, this was my take profit level. I readjusted this because in hindsight I saw a reason why I shouldn't have taken this level. Like we can see here, you can see equal highs. Like I've always been saying, liquidity above equal highs. You can see that they are not so perfect. Even the one is higher than the other. This one came in at 77.965. This one came in at 77.918, 965,918. I basically saw in hindsight that I shouldn't have taken this level. This I should have targeted the next high, which would have been somewhere around here. I looked at, if you if you take it to a lower time frame, you see that there was a high at this level. So that was where I set my take profit levels. But horse, by looking at this in hindsight, I will show you a trade screenshot so that I actually did take this trade. So let's look at it. Equal highs. Oh, this should be our take profit level. This should have been my take profit level. But of course, I took this level, and then you can see that price basically went all the way up to this level. Went all the way up to this level. Of course, looking at it, you feel like, why didn't I just leave it? But then that's what trading is. You don't know what will happen the next minute. So once you see an opportunity to take a trade, you take it. Once when you hit your take profit levels, you basically get out, take your profits, and leave to fight another day. So it's just the same thing. Price made it's just the same thing like I've always been saying. Price made this high, broke the previous structural high to the upside, came back down. Of course, you could have thought that, oh, price was coming back here, or price missed this our POI, so this level is no longer valid. But then price basically came back down because these people have to mitigate their sell orders before they take price high. And you'll be like, why do they do that? It's because they have access to the best of the best traders. They have access to the news. They could actually know where the market is good, where the market will go in direction in proportion to the news and news release. So within the 6th of December to about the 20th of December, I'm sure a news bordering on NZD or JPY or even USD, because the any news on USD basically affects the entire market. So this gave us a good risk to reward of 1 ratio 26.29, and price basically tapped into for about close to about 20 2 pips, and then just ballooned upwards. Of course, this is a good risk to reward ratio, and it's just like this. I like catching. Of course, I did take my profit here, but looking at this in hindsight, I'm just feeling I should have just let it run. I should have probably put my take profit level at this level, because but then price hit my take profit level at 77.929 and gave me 197 pips, and that's good. That's good. At least we didn't lose money, and that's good. So thank you, ladies.